Wise, formerly TransferWise, has rightfully earned its reputation as a game-changer in international money transfers. Its commitment to transparent, low-cost currency exchange at the mid-market rate has saved countless individuals and businesses significant sums. However, as with any financial product, Wise isn't a one-size-fits-all solution, and understanding its limitations is just as crucial as appreciating its benefits. As a finance expert, I believe in providing a balanced view. While Wise excels in its niche, there are several aspects where it might not align with everyone's financial needs or preferences. Let's explore these potential downsides in detail. 1. It's not a full-fledged bank. Perhaps the most significant point of distinction, and sometimes a source of misunderstanding, is that Wise is not a traditional bank. It operates as an e-money institution, EMI, and a money services business, MSB. This isn't just a technicality. It has practical implications. No deposit insurance, generally unlike traditional banks in many countries, like those covered by FDIC in the US or FSCS in the UK. Wise doesn't offer the same government-backed deposit insurance for your funds. While Wise does employ safeguarding, holding customer funds in separate accounts at established banks, distinct from its own operational money, this isn't the same as direct deposit insurance. This means that in the unlikely event of Wise's insolvency, while your funds are protected through safeguarding, the recovery process might differ from a traditional bank failure. It's worth noting that in some regions, like the US, Wise does offer pass-through FDIC insurance for USD balances if you opt into their interest feature. But this isn't standard across all currencies or without opting in. Limited banking services. Wise focuses primarily on international payments and multi-currency accounts. It doesn't offer core banking products like loans or credit facilities. You won't find overdrafts, personal loans, mortgages, or credit cards through Wise. If you need credit, you'll still need a traditional bank or other lending institution. Interest on balances, with exceptions while some regions or specific currency balances might offer interest, like the interest feature for USD balances in the US mentioned above. Earning interest on all your Wise balances is not a universal feature. Traditional savings accounts might offer more consistent interest-earning potential. Complex investment products. Wise is not an investment platform. You cannot manage stocks, bonds, or other complex investment portfolios through your Wise account. 2. No physical branches or in-person support. Wise is a purely digital platform. This means no cash deposits. You cannot walk into a physical branch to deposit cash into your Wise account. All funding must be done electronically through bank transfers, debit cards, or other digital methods. This can be a significant drawback for individuals who frequently deal with physical cash. Online-only customer service. While Wise offers various channels for customer support, email, chat, phone in some regions, all interactions are digital. If you prefer face-to-face assistance or dealing with complex issues in person, Wise might not be the right fit. Some users have reported frustrations with resolution times or the inability to speak directly with a representative for certain issues, particularly when accounts are temporarily frozen for security checks, a common practice across financial institutions, but potentially more frustrating without in-person avenues. 3. Account freezes and verification delays. Like all regulated financial institutions, Wise must adhere to strict anti-money laundering, AML, and Know Your Customer, KYC, regulations. This means potential for account freezes. If a transaction or account activity triggers their automated fraud detection systems, Wise may temporarily freeze your account or transfer for further review. While this is done for security, it can cause significant inconvenience and delays, especially if you need urgent access to your funds. Verification requirements. Setting up an account or making large transfers often requires identity verification, which can sometimes involve submitting documents and waiting for approval. While usually straightforward, delays can occur, particularly for complex cases or during peak periods. 4. Transaction limits and specific currency constraints. While Wise generally offers generous limits, they are not limitless. Daily and monthly limits. There are predefined limits on how much you can send, spend, or withdraw from your Wise account or debit card, which vary by currency and country of residence. While these limits are often sufficient for most users, those dealing with exceptionally large sums or frequent high-value transactions might encounter restrictions. Currency availability and payout methods. While Wise supports a wide range of currencies, the available payout methods and local account details can vary. Some less common currencies might have fewer options for receiving or sending money, or might not have local account details available, which could increase costs or delays. 5. Fees, while transparent, still exist. Wise prides itself on its transparency regarding fees, which is a significant advantage over many traditional banks. However, it's important to remember that fees are still applied. While often lower than traditional banks, Wise does charge fees for its services. These typically include a small percentage of the transfer amount, a fixed fee for certain transactions, or a fee for ordering a debit card. While these are clearly stated upfront, they are still costs to consider. ATM withdrawal fees. While Wise's debit card is excellent for spending, there are often limits on free ATM withdrawals, after which a fee is applied. For heavy cash users or frequent ATM withdrawals abroad, these fees can add up. 6. No check support. For those who still rely on paper checks for payments or deposits, Wise does not support this method. All transactions are electronic.